Hey, good morning, everybody. We have a mostly higher trade in the grain markets here early on Thursday morning. It is 6:25 a.m. Central Time as I speak here. December corn futures up 1 1/4 at 532 1/4. November soybeans are down 2 3/4 at 1324 1/2. September Chicago wheat up 2 3/4 at 625. September Kansas City wheat up 7 3/4 at 592 1/4. We have September spring wheat up 5 cents at 813. If you guys are listening on the podcast, as always, really appreciate it. If you're watching on YouTube here, make sure you hit the like button. Make sure you subscribe to the channel if you have not already. That would certainly help YouTube out to spread these videos around a little bit. To get into the headlines here this morning, weather continues to be a key focus for traders and for the markets. The way it looks today is kind of similar to the way it's looked for a while. We've got a wetter forecast for the Corn Belt and a drier forecast for the plains. Over the next 7 days, you're going to see some more rain here for central, eastern areas of the Corn Belt, even some western areas. But then you look at North Dakota, South Dakota, Oklahoma, Kansas, really not that great the next 7 days in regard to precipitation. Now, over the last week, South Dakota did a lot better than North Dakota did in terms of precipitation. So did southern Minnesota. We saw some decent coverage in amounts there. So those are your problem areas, and a few of them did okay here over the last 7 days. Some of them still a lot to be desired. When you go out to that 6 to 10 or 8 to 14 day period, we've got some warmer temperatures coming back in to say the northern 2/3 of the Corn Belt. That's something to be aware of, certainly. So really a lot of the same. I mean, better for central and eastern areas of the Corn Belt, western areas, northern plains, really not so great in regard to weather. I'm sorry if I've got a little bit of wind interference here this morning. USDA will release its monthly crop production and WASDE report on Monday morning, so we've got another report on Monday. The traders ahead of this report estimate that USDA might make some small downward revisions to their corn and soybean yield estimates. I think there's also a case to be made that USDA may just kind of kick the can down the road here. So we'll see what develops there. In regard to carryout estimates, traders expect slightly smaller old crop corn and soybean carryouts versus last month. And then when you go to new crop, maybe a slightly larger corn carryout estimate, maybe a slightly smaller soybean carryout estimate. So kind of a mixed bag. I'll have some more details on this report the next couple of days. USDA's office in Brazil made some updates. They increased soybean acres for this last year. They put the crop at 137 million metric tons, which is the same as the official WASDE number. For next year, they've got soybean acreage at 40.3 million hectares. That's 99.58 million acres. That would be the most acres of soybeans that any country's ever planted. They're estimating next year's production at 143.5 million metric tons. That's actually a little bit below the current WASDE number, but still that would represent the largest bean crop that any country has ever produced if realized. So they're looking for another monster in Brazil. Of course, weather has to cooperate for that. We've got EIA out later this morning with ethanol data. Ethanol production is essentially back to normal. We've only been running a couple percentage points below 2019, which was our last kind of pre-COVID year, I guess. Weekly output's been above 1 million barrels per day for 7 consecutive weeks. I would imagine it's probably 8 after today. We'll see what happens. Ethanol stocks have risen for 5 consecutive weeks, indicating that production is outpacing demand. Still, ethanol stocks seasonally pretty low here. The Federal Reserve had its minutes out yesterday. They are in no rush to taper asset purchases. And when I say taper asset purchases, what I'm referring to is the $120 billion per month in treasury bonds, essentially, that the Fed is buying from the U.S. government. That's their way of printing money, essentially. This is a tricky deal because this was a dovish statement from the Fed. They're not going to act on tapering. They're not going to act on interest rates till 2023 is kind of the general consensus here. They say they're concerned about inflation and that inflation risks are tilted to the upside, yet they haven't done anything about it. And we're obviously seeing inflation just about everywhere. I mean, asset values across the board, whether it's real estate or land or equities or whatever, everything is much, much more expensive. The S&P 500 posted a record high close yesterday. It's sharply lower this morning, though. I think that record close yesterday can be attributed to those dovish Fed minutes, if you want to call it that. The index at yesterday's close was up 16% year to date, up 99% from the March 2020 COVID low. That's some really impressive stuff. World food prices fell in June for the first time in 12 months. This is the first time basically in a year that we've seen this FAO World Food Price Index decline, but it's still up 34% versus the same month last year. So food prices continue to rise here. I guess that's not a shocker given the commodity markets. Cattle market was sharply lower yesterday. Cash cattle kind of mixed, 120 up to 125. In the outside markets, we do have a sharp sell-off in the equity markets. I think the European Central Bank was out with some news. I'll talk about that tomorrow. The S&P's down 57. The Dow's down 470 points. The gold's up 12 bucks. We've got silver up just a little bit. We have the crude oil down 45 cents at 71.76 in the August WTI. Bonds are up more than a full handle. Everybody have a wonderful day. Today I'm on the road. Obviously, I will be for another day. I'll be back in the office Monday. I'll talk to you same time tomorrow.